rises 12% to hit the highest level in nearly 2 years.
Tata Motors is the top Nifty loser following a mixed quarterly performance. The management commentary is cautious. They expect no growth in JLR EBITDA margins for FY25. Cipla is a top Nifty gainer as the guidance of 100 basis points margin improvement enthuses the street. The management also guides for a smooth pipeline of drug launches to support growth in the coming years.
Prime Minister Modi says there is no change in the narrative and reiterates that NDA will, and I quote, easily cross the 400 mark. Adds there is no pressure on him and predicts a surprise in Andhra and Telangana. That is a Network 18 exclusive. Hello and welcome to Markets Forward, your go-to program where we aim to get you everything you need, the key data points as you gear up for the next trading session. I'm Prashant. With me, my colleague Reema Tendulkar. Reema, hi.
Hi Prashant, we're going to be with you for the next 20 minutes. We've got you covered with all the big news, the key developments in Dalal Street, top corporate voices and the events to track. But first, the market action, right? All over the place, but the ending was good, in the green.
Yeah, and you know, when you have such big swing days and you're down 200 points and then you see a positive daily close, it sort of, you know, the typical kind of confidence and some hope that maybe you've kind of finished some phase of a correction and now perhaps, you know, there is some stability. So let's see, fingers crossed, right? No one expected the Nifty to be down 200 points in the first hour today, but we had that kind of a day. So it's a big swing day for the market. We broke through those trendline supports and then, of course, there was a sharp recovery which ensued. That level is 21,930 and we've kind of managed to, for the second day running, defend that particular level. It's not very far away from where we left off, but it's good the way we finally closed. The day low today was 21,821. Remember, the April low was 21,777, so that did not come into view, but we did sort of break this trendline support. Intraday, the Nifty Bank low is 46,983. So now these kind of become, in a way, a bit of a sacrosanct level. Although I would still say 21,930 should be defended if any sort of stability has to emerge here. Capital goods as a sector really saw very strong buying, right? Siemens, ABB, and a bunch of other names as well. You could probably throw in a BEML there as well. But some of this, of course, is results reaction. So, you know, but as a sector, the space did very, very well. Broader markets were a bit more mixed. There were more stocks down than up. The small cap index actually ended down 0.4, 0.5%. Globally, things are all quite okay. It's just that the market here has been very focused on whatever is happening here locally and ignoring what's happening globally. In any case, I mean, the big data point which could really move markets globally is the CPI number out of the US, but that is only on Wednesday. So we'll see. But hopefully, after today's big swing right at the beginning of the week, you know, over the next couple of days, we see a little bit of stability here. Reema.
We'll also watch for the FI number, right? The FIs have been relentlessly selling in the cash market. And today, with the kind of recovery that we've seen intraday, nearly 300 points on the Nifty and on the mid-cap index, it's been a 1,150-point recovery on the mid-cap index. The mid-cap index was down 950 points at one point of time, and it's finally ended with a gain of close to about 200 points. The advanced decline ratio, though, was still in favor of the losing side. Banks staged a remarkable recovery. The Nifty banking index up 333 points. Autos were the big drag sectorally. The Nifty auto index down 1.5%, courtesy Tata Motors, while pharmaceutical led the rally. Let's dive into the individual stocks. But before that, let's tell you what we have for you. The top movers and shakers of the day with Vivek. The stock of the day undoubtedly was Tata Motors. Zomato lit up the screens. A big move seen in the last 1 hour. And UPL. We'll tell you why these stocks were on our radar. And last but not the least, we delve into the key market events to watch out for. But first, let me go across to Vivek now for the big movers and shakers of the day. Vivek.
Well, thank you so much for that. A sharp intraday recovery, going ahead and ensuring that more gainers than laggards in today's trading session. The first stock on our list was Cipla. Cipla, saw a bit of a sell-off after the Q4 results, but very strong management commentary, especially a positive surprise coming in terms of the margin expansion. The margin range being seen in the range of 24.5% to 25% for FY25. And on the back of that, stock ended at the top, high of the day, one of the top Nifty gainers as well. The second stock, of course, has to be ABB India. Very, very strong set of results. Beat all of the analyst expectations. Very strong commentary as far as the management call too went. And on the back of that, high by 11.5%. And like you mentioned earlier, the entire capital goods pack went up along with ABB India. The other stock on the radar was BEML. Very strong order book coming in this time around, almost 12,000 crores of order flows that the company has currently. Along with that, in this particular quarter, the margin expansion was over 400 basis points. So that was something aided the 14% up move that we saw in BEML. The other stock on the radar was UPL. Again, a very good set of results, beating most of the street expectations, and also some positive commentary coming in terms of recovery seen in the agrochem space. Company expects margins to normalize from the second half onwards. The stock, back of that, the stock already had around 12%, going into the results in the last 3 trading sessions, saw another 6% up move today. Dr. Lal Path Labs, a very good set of results. Along with that, the company has gone ahead and guided for double-digit revenue growth. Some brokerage upgrades coming in over here. Stock ended higher by almost 6.5%. Also, Polycab India, the numbers came in during market hours on Friday. The stock moved higher on Friday. And today, on the back of upgrades, seeing further follow-on buying, stock ending higher by almost 4.5%. On the other hand, results disappointments were punished quite significantly. Syrma SGS, fourth straight quarter where the company disappointed. Morgan Stanley downgraded the stock almost 17% lower as far as Syrma was concerned. Bank of India, slippage is the only disappointment. Despite a good set of results, stock, ended low quite significantly, almost 10% lower. Tata Motors, muted demand commentary. Some brokerage downgraded the stock, and the stock ended as the top laggard as far as the Nifty was concerned. And lastly, VIP Industries, multiple one-offs but significant margin contraction, and the stock ended lower by over 3%.
Let's invite Anand Tandon and Shilpa Rout, senior analyst at Prabhudas Lilladher, on the show now. Thank you very much for joining in. Anand, first come in on UPL. What have you made of the Q4 numbers? Now, stock has gone through a rough patch, but do you think the worst is over and perhaps in 1 or 2 quarters, we will start seeing a significant improvement in the numbers? Is the stock a buy at current levels?
Stock has fallen quite significantly and therefore may not have that much left on the downside. As you mentioned, the numbers this time were a little better, but not necessarily great because there is still some extraordinary income there. The problem with forecasting performance of UPL is that it operates in so many countries, and you are talking about seasons and weather, which affect its performance, and therefore that's a difficult one that to take. But by the same logic, it also offers some amount of stability because somewhere in the world they will be doing well if they are doing badly somewhere else, hopefully. So overall, I think at this stage there is not that much downside in UPL, and therefore, to my mind, the upside to downside ratio perhaps is in your favor.
Okay. Anand, hi, Shilpa, hi. We'll sort of pull out some more details on UPL numbers, etc., what the management said with Hormuz in a bit. Shilpa, but comment on the market itself. Do you reckon after the fall we've had, today was significant in any way? There was a big swing, 200 points, and we ended the way we did. So can we expect a little more stability?
Definitely, if you see the FIS data, the net longs, we stand at around 33-34%, so which is quite low. But of course, we have seen that the net long squeezing it to as low as 8 and 9% as well. But this is significantly lower, and from here, any moment, we always expect that a short covering rally resumes. So that is how it was played today, I believe. The levels of 21,700 was defended, which was very critical. We've seen that bounce coming in from these levels time and again, and we've already marched a rally for around 1,000 points. So this is how, if it is playing, then 22,500 to 22,600 zones will be the next levels that we can look forward to, with the stop loss at 21,750 on the downside.
Okay, stay on. Let's talk about Tata Motors. It reported a mixed bag in Q4. Revenues were in line, but the EBITDA margins were a miss. But it's the cautious management commentary which spooked the street. The company is saying that in FY25, JLR margins will not improve further. Multiple downgrades too. Nomura downgraded the stock to a neutral. They say JLR could face demand risks, while Morgan Stanley downgrades it to an equal weight, citing rising competitive intensity in the passenger vehicles business. So that's Tata Motors for you. Anand, how is the risk reward in Tata Motors after the kind of return it's given shareholders in the last 1 year?
So, I think the answer is very clear. It has done exceedingly well. And if the management is now saying that they may not be able to make a great grow at increasing margins, that you should be read as saying that the margins will be under pressure, and you may actually find it coming down. If you want to look at the commentary that is happening from auto companies around the globe, that is pretty much the same kind of story that you are seeing. Many of the global companies also have kind of sounded the alarm in terms of being able to say that the growth is not as aggressive as they might have hoped for. Overall, Tata Motors is still very much a global story rather than domestic story. And the kind of valuation you are at, I think, I would kind of agree with, I think Motilal put out a report saying the best is over. I would tend to agree with that.
Is on the charts, Shilpa, anything on Tata Motors?
Definitely, Tata Motors, we have seen, the stock, of course, because of the downgrades and all, it has come down. But this correction towards 920 can be a good thing to go long again in the stock, keep a stop loss of around 880. I believe then some sort of consolidation can happen, and this phase you should again go long for targets of 1,000 and above.
Okay, well, the next one is ABB, right? Big move. It's up 70% this year. And of course, this was on the back of a very strong set of numbers for the first quarter. The company's revenue growth was driven by electrification and process automation segments. Vamakshi is here to wrap up the results for us. Vamakshi, over to you.
Well, absolutely a strong set that came through from ABB India. It was beat across all fronts. When we look at the revenue, it came in nearly 7% higher than what we were expecting. Like you rightly pointed out, this growth is largely being led by the electrification and process automation business. The margins also were expected at somewhere around 14%, and margins have, in fact, it's a significant beat as far as margins are concerned. They've come in at almost 18.3%. Barring robotics, margins have expanded for all segments. Now, when we look at the net profit, it has seen an 88% surge on a year-on-year basis, coming in at almost 460 odd crores. The order inflow is looking quite healthy as well. It's up almost 15% year-on-year, and the order backlog was also up almost 25% at 8,935 crores, and this in turn provides very strong revenue visibility for the company. Apart from that, in the con call, the company said that there were no one-offs in the Q1 performance. The better performance was largely attributed towards better revenue mix, favorable material costs, and they believe that going forward there will be a good growth coming in as far as capex is concerned, especially in areas like data centers, automation. In fact, data centers, railways and metro as well as electronics, these are some of the focus areas for the company, and they have highlighted that these segments could actually witness growth of almost 15% plus. So overall, good set of numbers. We also had two brokerage reports come in. UBS raised its target price to 8,830 and Jefferies raised its target price to 8,845 rupees per share. So overall, a good set. The stock a surge in trade today.
UBS values ABB at 75 times forward multiple when it ascribes the target price of 8,800. Thank you, Vamakshi, for joining in. Let's talk about Cipla. Came out with numbers on Friday during market hours, but post that, we chatted with the management. There was a conference call. Ekta joins in with the details. Ekta.
Thanks for that. Well, one of the key things about Cipla this time round was the margin guidance. So they have said that the margins will improve to 24.5% to 25.5% for FY25, which is an improvement of 100 basis points year on year. Separately, cash deployment to be used towards M&A as well as increased payout to investors. They are open to a large acquisition in India. India and South Africa would be key geographies which would be key growth drivers. They've completed the remediation of Goa and the remediation of Indore is underway. The Abrixon generic launch, which is a cancer drug, is expected in late FY25 now. They are optimistic of growing the US business over the current base of $900 million, and they aim to launch 4 peptide assets, which is a type of drug, in FY25. JP Morgan, overweight, they've raised the target price to 1540. They continue to like Cipla, and they were positive about the EBITDA margin guidance as well. Jefferies too, they said the company did not provide a sales guidance, but the margin guidance was higher by 180 basis points at a midpoint than previous estimates. Citi as a buy, target price 1650. They said that the margin guidance was better than expectations of a flattish trend. HSBC and Kotak both have a buy, and Kotak has retained its ad, and both seem to be optimistic on the margin guidance for Cipla as well.
All right, Ekta, thank you very much for that. Actually, pharma as a space did quite well today. There was also the other mover, results-based reaction, which was Piramal Pharma. Piramal Pharma, of course, spiked up sharply, although ended only with a 2% gain. The high there was 166, ended at about 153 rupees or so. But there was Cipla, but there were also other moves, right? Lupin was up about 4.5%. Aurobindo was up 4.6%. Gland, Divi's, Abbott India, Granules, and a bunch of others as well. So as a sector, the space did very well. Any thoughts, Anand, here? Anything you like in the space?
Well, generally the sector is doing well. The US market is doing well again after a long time, and the Indian market continues to grow at small double-digit kind of growth, which is pretty much par for the course. But the delta that you are really getting is from the overseas markets, and given the fact that, as I mentioned, those countries are delivering good revenues for the Indian API manufacturers and the ones that are selling overseas. I think overall it's a decent space to be in, relatively not that expensive. If you look at the industry, P itself is around 26, which is just marginally higher than what the market is at overall. So I would argue that this is perhaps a place that one could still hide. Not that they are particularly cheap in context of where they have been, but overall I would be looking at those companies which have got a good overseas regulated market portfolio and stick with that.
Okay, let's talk about UPL that also reacted positively to its numbers. Hormus joins in with the management commentary. Hormus.
Two main things that you're watching out for when it comes to UPL. One was the guidance for FY25 and the other one was the debt picture. Now, when it comes to the guidance, the company said that revenue growth will be between 4 to 8% for FY25. Remember, they ended FY24 with a decline of 20%. When it comes to the top line, EBITDA growth is expected to be between 6 to 10%. So that is the guidance that the management gave. On the debt front, at the end of Q3, they had said that from 3.7 billion, they'll bring the net debt down to 2.5 billion. They've managed to bring that down to 2.66 billion as well. So another positive there coming in from the debt reduction perspective. They also said that EBITDA in FY25 on an absolute basis may grow more than 50%. Now also the $300 to $400 million that they would generate in operating cash flow during FY25 would be used to pare down debt. The management also said when it comes to the rights issue that it will be held either during Q2 or Q3 of FY25, and they aim to raise up to 500 million through this rights issue, which will also be used to pare down debt further. And they also said that they are also looking at other opportunities to raise funds besides the rights issue. When it comes to geographies, the Latin American business, which is the core for UPL, almost 40% of their top line comes from there. They said that Brazil as a business continues to face challenges, but the rest of Latin America will see strong growth in FY25 as well as they saw in FY24. And lastly, they are also expecting a strong year from Europe in FY25. So the stock ending 7.5% higher. It'll be interesting to see how analysts view these numbers and the management commentary. Back to you.
Thank you very much for that. And the other stock of interest today was Zomato. Good set of numbers. And the key highlight is that Blinkit has turned EBITDA positive in the quarter gone by. Mangalam joins in. Mangalam.
Well, as valuations of Zomato increase, people are valuing Blinkit more than Zomato itself. The attention has moved to Blinkit as well. The headline for Zomato's fourth quarter numbers was Blinkit has turned EBITDA positive. The management had given guidance of it turning EBITDA positive on or before the first quarter of FY25, and it's done it one quarter before that itself. Overall as well, the numbers weren't bad. The revenues grew 73% year on year. The EBITDA came in at an 86 crore gain versus a loss of 226 crores. And on the bottom line, the company reported a profit of 175 crores versus a loss of 188 crores as well. Food delivery, the revenues grew by 48%. The food delivery EBIT actually jumped by 247%, and that's reflective in the margin improvement there as well at around 16%. But the highlight was Blinkit, where the revenues grew about 111%. They reported an EBIT gain of about 2 crores, and this compares to the loss of 179 crores. Importantly, the management has spoken about aggressive growth plans for Blinkit itself. They're aiming for 1,000 quick commerce stores as against 526 right now. And this 1,000 comes by the end of this fiscal itself, 100 stores of which will be added in the first quarter itself. Over the next few quarters, because of this expansion, maybe Blinkit EBITDA margin would be near zero. But on a steady state basis, they've targeted 4 to 5% margins. And for a company that has seen a share price move of over 200% in the last 12 months, they have cash of about 12,000 crores on their books as well.
All right, Mangalam, thanks very much for that. So it's done phenomenally well, right? And, maybe today, after the numbers, and maybe, sometimes what happens is during the day of the result, stock, by the way, sank 6%. It ended about 3.5% lower. But the next day is another day. Anand, any thoughts? Zomato. By the way, the other one with the rest of the market, the food delivery business, Swiggy is also coming up with an IPO. So, investors will have a choice like consumers do. Your thoughts on Zomato?
Well, so the question really is that, the delivery business, so the food part, at least you have a very strong margin, right? Because you're getting a share from the seller as well as the fact that you're charging platform fees and so on. The kind of margin that you make in Blinkit it is a lot different. You're not going to be able to charge for what product you're producing. So it's mostly a courier business for all practical purposes, and that too fairly stiff target of being able to deliver very quickly. What would be the steady state margin, to my mind, is what you are really targeting for, and the kind of earnings that you would be able to get in a steady state. Right now, of course, because of the fact that it is growing, people are willing to pay all kinds of price for it because the numbers will continue to rapidly increase. But if you were to then step back and look at what, for example, some of the logistics companies earn, I think there will be some level of reality check there that one needs to be putting in. So currently, for the moment, I think the best way to do is to ride the stock. There is no doubt their execution capabilities have been well proven, but I'm not necessarily very gung-ho about the kind of overall valuations that one can sustain in Zomato at this stage.
Okay, thank you, Shilpa and Anand, for joining us today on our show, Markets Forward. We need to get into a break. On the other side, the top corporate voices along with the key events to watch out for. Stay tuned.
But they said they're running well ahead of that stated guidance. I mean, most likely that should be achievable in 25 itself. They did, though, guide on margins. They said that 12 to 13% EBITDA margins are possible. Their market share, of course, has been expanding, which now stands at between 25 and 26% as compared to 22 to 23% earlier.
Okay, the other company on our radar today was Dr. Lal Path Labs. The company is confident of sustaining 26% EBITDA margins in FY25. They also aim to beat the FY24 revenue growth of 11%. The management reiterated the thrust on volumes while not planning any price increases.
Well, the other one from the chemical space was Aarti Industries. The management is maintaining its FY25 EBITDA guidance of between 1,450 crores and 1,700 crore rupees. And it is targeting this to be volume-led, both on the discretionary and the non-discretionary segments. They're saying volumes this year could grow between 20 and 30%. The management also said that things will keep getting better every quarter, and that's how they plan to hit that stated guidance.
And finally, Bank of India management said that the rise in Q4 slippages was largely on account of an increase in the agri and MSME loans. But the management did say that the slippage ratio will come down to 1.2% next year, and even the gross NPAs, which were at 5% in the current quarter, will decline to 4% by the end of next year. They've also guided for a deposit growth of 11 to 12% and an advances growth of 13 to 14%.
All right, well, lots to track, lots of corporate voices there. But before we sort of wrap up on this program, as always, let's get you some of the key events to watch out for as we come back tomorrow. Mangalam is here with that. Mangalam.
Well, we're still in the thick of results season, so a bunch of results tomorrow. From the Nifty pack, we have Bharti Airtel reporting their numbers, and then from the important stocks standpoint, we'll watch out for Siemens, Colgate-Palmolive and Shree Cement as well. Siemens was a big gainer in today's trading session. Then there is, of course, the Nifty Financial Services weekly options expiry that plays out tomorrow. HDFC Bank will be an important one to watch out today as well, led the recovery today. But tomorrow there is a press conference to, announce the launch of a new offering. What that offering is and whether it can rev up growth or not is something that we'll be keeping an eye out on. India macro data, we have the April WPI at noon tomorrow. But more importantly, everyone will be watching out for the US Purchasers Price Index, or US equivalent of a WPI in the evening. Thereafter, there would be the CPI day after. But for tomorrow, the PPI will give a direction into where inflation in the US is headed.
Okay, thank you very much for that. And with that, it's a wrap on Markets Forward. Thank you for watching.